If you can give me the next 10 minutes of your life, I can guarantee you without a doubt, I will turn you into a better trader. Now, this is how I accurately predict what the market is going to do next, and it requires us to prioritize the higher time frames. So by higher time frames, what I mean is by doing your analysis based on the 1 hour, 2 hour, 3 hour, 4 hour, daily, and then weekly. And we're going to break it down to intraday price action once I discuss what I look for on these higher time frame levels. So what we want to look for on the higher time frames is any areas of supply and demand or Fibonacci retracement levels. So if we are looking right here on the 4-hour time frame, and if you guys do not know how to draw your supply and demand or Fibonacci levels, I have many different videos here on this channel teaching you on how to exactly do that. But looking at the 4-hour time frame right here, we have a 4-hour demand that price tapped into very early on Monday morning, made its support before rallying to the upside. Now, if we go to the 3-hour time frame, we had a 3-hour supply zone sitting right up here. So this is how I would mark my 3-hour supply. Now, these were the only key levels that I was watching in the market this week, and this was the main reject that I was waiting for this entire trading week. So now this is how I accurately predict what the market was going to do next. So again, we had that previous demand zone on the 4-hour as well as the 3-hour, we can see right here, and price came down into it, making it support. Now, looking at the chart, we had no areas to believe that price was going to reject until it went up into this supply zone. Now, what the market is going to do is it is going to trade from one area of liquidity to the next. So because price bounced this demand zone right here, there was a very high probability that price was going to start trading up into this supply zone before we started to see a pullback. So two things could have ended up happening. One, either price bounced off of this demand and went up into the supply zone where we could look for a reject to take price back down. Or two, if we zoom out to the daily time frame, we had this daily demand zone all the way down here. So if price were to come back down into this previous demand zone right here and break through it, what likely would have happened next is we would have went to the next area of liquidity, being that daily demand zone, before seeing price react and come back up to trade into whatever the next key level was. And this is how I start formulating game plans going into the trading week, as well as my pre-market plans as well. Now, when we trade into these key areas, like example yesterday, I stressed the entire morning that I did not care about long trades whatsoever. I said I am only looking for shorts because price was trading up into our supply area. So if we're looking at my pre-market plan, looking for a reject in supply from 61.17 to 61.47. I had no bounce areas. I didn't say I was looking for any uptrend entries. And in my live stream here on YouTube, I specifically said I only care about puts and I only care about shorts. And again, you can see the same thing with NQ. I was only looking for a reject. So when we trade into these key areas, again, after accurately predicting where price is going to go next, once price started trading into this key area for a rejection, again, I only cared about looking for short opportunities. And as we can see, we went right up into it, rejected it, and that ended up being the exact high before we sold off significantly yesterday. So again, what we can do by doing these higher time frame key level analysis is we can formulate a game plan. When price ended up bouncing off of this demand because we had no resistance until price got up into here, what can we start looking for intraday? Uptrend entries. So we caught a lot of beautiful trades to the upside this week on ES and NQ, again, because I had a feeling that price was naturally going to trade into this area of resistance. Now, because price ended up rejecting off of this area, there's actually a couple different things that could end up happening. We ended up generating a new supply zone right here. So if we can trade up into this green rectangle early next week, I'm going to be looking for a reject. But if we start taking out these lows from Friday, there's a pretty high probability that we are going to trade back down into this next demand zone. So what my game plan is for next week, two different scenarios. We come up, we trade to this supply zone where I will be looking for a reject to take price back down, or if price ends up breaking below this low, looking to take it down into this demand zone, look for some kind of support to take it back up into the previous supply zone. Now, obviously, we can break above this level, or we can break below this level right here. So if we take out this supply zone right here, I will wait for price to trade to this exact area at 61.36 to look for a reject. If it takes that out, then I will look for uptrend entries until price gets up into the next key area. Or if price trades down into this demand and we break it, I will look for short entries to take it back down into the next key area. And if you're struggling to identify direction intraday, doing your higher time frame analysis is going to help you get a better understanding. Because again, if we do make this a support area right here and we end up popping back up early next week, we can then say, okay, I am going to look for uptrend entries until price trades into this supply zone. Once we trade to it, I am only looking for rejects. Or if price breaks below this previous low, you can say intraday, I am looking for downtrend entries only until we get into demand, and then we can look for a bounce. And again, typically what we are going to see is we are going to see the market trade from one area of liquidity to the next. The market's not going to go stop hunting. It is naturally going to gravitate towards areas of large unfilled orders, fill the orders, and then look to make a move. Now, once I started looking at the market from a higher time frame perspective and understanding where could we trade to next, that's when I noticed my accuracy go way up. I've been a lot more precise in the market, and this literally gives you a cheat code to understand where are we going to trade to next. So that way you can formulate a game plan for the day and look for high probability trades. Now, it's the same thing with Fibonacci retracement. So I do want to go back and I want to draw that 1 hour supply zone, because again, to me, this is a very high probability area to look for a potential reject. Well, if we zoom out to the 4 hour time frame, if this actually ended up being a bottom point right here and we bounce back up, we actually do have a Fibonacci retracement from this pivot high to pivot low. So now there's a few different areas that I could start looking for rejects. If price gets to this exact level right here, I'll look for a reject. If we break above it, we'll likely trade into this area and I can look for a reject. If we break above that, then these fibs are invalid and we can look for an uptrend entry until price gets into supply. So again, these are the two main ways that I am finding key levels in the market. And I trade these all the time live here on my YouTube, and you guys see these levels play out almost every single day. So if you guys are not joining the free live streams that I do here on YouTube, I highly suggest you start doing that like ASAP. Make sure you're subscribed, turn on the bell notification so you are notified whenever I get live or upload a brand new video. But now what we are doing when price trades up into these key levels is we are simply just looking for confirmation or down into a key level. So if we trade up into an area of resistance, whether it be a fib reject or a supply reject, we are looking for bearish price action. Bearish hammers, gravestone dojis, bearish engulfings, or just long upper wicks. And then we also want to see an elevation in the volume, because the elevation in volume is going to be telling us that sell orders are actually getting hit at these levels. Or if we trade down into a demand like we did over here, again, this was that previous 2 hour demand. I'll draw it on the chart so you guys don't say, oh, he's making that level up. Or sorry, it was a 4 hour demand. But anyways, so here is the 4 hour demand level. Again, we traded right into it, made it support. So what we are looking for when price trades down into demand levels or a Fibonacci retracement bounce is long lower wicks, bullish engulfing, bullish hammers, dragonfly dojis, and then again we want to see an elevation in the volume to tell us truly that buy orders are getting hit at the key level. If we can get the elevation in the volume, a wick off the area, whether it be a reject or a bounce, this is very clear to us that buyers or sellers are entering the market, and we can look for a trade in the direction of the confirmation. So trading really is only as hard as you make it out to be. My approach to trading is very simple. Identify your supply and demand zones, as well as any Fibonacci retracements that might be valid. Understand that price is likely going to trade into these areas. Follow the overall trend until we do hit those levels of interest, and then look for confirmation at the levels to identify a low risk entry. But that's going to wrap up this video. So if you guys did find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.